Good morning, everyone, and welcome to my morning notes. I am A.F. Thornton, the Chief Investment Officer of Blueprint Quantitative Strategies, and I'm here to help you this morning. I hope that's definitely our goal. Let me get some precatory language out of the way, and we'll jump right into the market here. We're coming in a little bit early to hopefully gain the benefit of watching the GDP report and employment report released live in a few minutes here. But let me get into the risk disclosures, and I'm going to keep it really brief. These are educational videos, not investment advice. And of course, we're talking about futures and options and things that are highly leveraged and not for the faint of heart or for amateurs. You better know what you're doing before you touch these instruments, because you can lose a lot of money. So keep that in mind, and they want us to tell you just because something worked before doesn't mean it'll work again. I guess that's obvious. Yet we study the past to try to predict the future. We just can't act like it works, I guess. And people quote investment returns and things on these videos. Just remember, there's a lot of way to calculate returns, and sometimes they can be manipulated and distorted. It wouldn't be Wall Street without it, right? And clearly, we're not liable for your investment choices. I mean, you're obviously a smart, intelligent person, or you wouldn't be here. So you're not going to take your advice from some goofball on the internet. And even though I've been doing this for 35 years, I can still lose money and make mistakes. So never forget that. So anyway, with that out of the way, let's head back to our markets. And I always like to start here. This is a weekly chart of the S&P 500 futures, which is pretty much what I trade exclusively because I can make more than enough money doing that. And I guess it gets boring at times, but I always thought to myself, I could be really, really good at one thing, that would be a way to make money. And I treat this as a business. This is about making money. It's not about having fun, even though my wife is absolutely convinced that when the door closes on my office, I'm playing video games all day. So I'm sure there's more than one wife out there that thinks that, or husband. But at any rate, so what you're looking at here is a volume profile on a weekly chart. And what I do is I take this back as far as this data exists at these prices, which has been kind of easy since we had the breakout above the February 20th high of the COVID rally. So we can kind of isolate this data and really, look at where the volume is concentrated at price. And this is a good starting point for support and resistance. And from a valley to a valley is really considered sort of a complete auction. I don't care if you're looking at a monthly chart, weekly chart, daily chart, or a 5-minute chart. So these peaks are really the support or resistance depending on which direction you're coming from. Sometimes you stall in the valleys, and sometimes you'll climb back up again. But knowing where you are on this is this is like my GPS in the car. It's my roadmap. Kind of tells me where I'm going to encounter support and resistance as we move through these different areas. Now, we can further refine that by looking at the options market and looking at what the option market expects the move for the day to be. This is where people and dealers write their option strategies. Generally speaking, there's a 70% chance that the market will stay within these ranges. But like yesterday, after the Fed announcement, we had a 2 sigma move and we moved outside of it. That's pretty much the exception. So in this big outline here, from 38.58 to 40.72 is what we calculated on last Friday, and this is the expected move for the week. Again, 70% probability that we will close within this range by Friday's expiration at the close tomorrow. Just like there's a 70% chance we'll stay within this range today by the close. Now, before Friday or before the close today, we can move outside these ranges. So they're basic guides. They're not written in stone. I think what these expected moves help me do is to focus on the key things that might happen in that area during the week. So I don't have to worry about stuff that's happening down here. I don't have to worry about anything that's happening up here. I can kind of focus my efforts in these areas and just maybe slightly above and below. So I only care about the moving averages I'm going to run into there. Certainly these high and low volume nodes. Anything else that I'm looking at as far as key support and resistance, like during the day, during the day you want to know what the open is, the initial balance high and low. You want to keep track of your midpoint for the day. That midpoint's important in any time context, because when you take any candle, whether it's a monthly, a daily, a weekly, or an hourly, when you're going past the midpoint of that candle, it raises questions as to whether or not the market might reverse at that level. So for today, at this moment, while we're live here, this blue line is where the market's trading right now, and that's right around, let's see, 429.50 or so. And the market settled yesterday at 339.23.25. You'll see in a moment, we'll track the opens and everything. So I've marked all these key levels. So today, this 40-30 range is kind of critical. If the rally follows through from yesterday, then we could get up here to 40.65, which is the top of the move. And of course, we've got the top of the weekly move up around 40.72, 40.73, and that's been kind of our X marks the spot, which I'll get into shortly. So this is kind of what I'm looking at. This is for the week. So right now we're up in the upper half of the range. The other thing I want you to notice is, I call this a sawtooth pattern of volume. This is the area that we crashed through on that capitulation before we hit the June 17th low. So there's not a lot of volume in here. I'm a little surprised the market hasn't moved through this area faster. We do have the significant 4,000 level in the middle of this, and that may be one reason why. And believe me, 4,000 is important now. That's where all the significant options and gamma concentrates at the moment. It's also the call wall. I mean, it's a formidable area. And having gotten through it yesterday, although, again, not a lot of volume coming through it, it should provide support now if this rally is going to follow through. So I don't know, you may want to take a picture of this. And let me also say that, because I forgot to mention at the beginning, go over to our website at blueprintquantitative.com, because a lot of these, the discussion of a lot of this is over there. And remember to leave the E off Blueprint. Blueprinttrading.com also takes you to the same place. And a lot of good information over there. Go to the blog. We have a trading room twice a week, including today, Tuesdays and Thursdays. So anyway, let's jump over to the daily chart, because we're now getting the announcements on the employment report. So let's see what's happening. And also GDP. So all of this is important. Here's all my software installations from the morning. So I'm watching a bunch of things here on my screen. I needed this like I needed a hole in the head. All right, let's see. We're going to go over to Financial Juice, get a little information here. And we'll see what's going to happen, and then we'll review our key levels, as we always do. So a little bit all over the place right now. Let's get rid of that. And how about we step down to a 5-minute chart here? Actually, we'll go to the hourly. And let's make that live. All right, so not a lot of movement either direction so far. Let's see what the numbers are. Leaning a little bit to the downside. All right, we do have negative GDP. The advanced actual is 0.9%. The forecast was 0.5. Previous negative 1.6%. So the communists and leftists running our government will now redefine, what a recession is, because they don't want one before the election. I'm actually surprised that they didn't have enough influence to cook the books. So the redefinition is the new norm, straight out of Orwell, right? But maybe, just maybe, bad news is good news. So I'm also seeing jobless claims are coming in a little bit lower than expected, so that'd be a positive. But this one's going to knock your socks off. The U.S. GDP deflator advance is showing inflation expectations, let's see, around 8.9%. So that's well above expectations. So I don't know. I don't know if bad news is good news is bad news. Does this help the Fed ease off? We'll just have to see how the market right now. We're down, but it's early. But that welcome to an official recession, even though we've got to get old George Orwell out of his grave, and we'll go ahead and see if we can redefine what a recession is. Just like we redefine what vaccines are. Remember? It's the craziest. It's like I feel like I'm living in a movie. It's so surreal. This is, everything I read about George Orwell as a kid. So it's just Animal Farm on steroids, I guess, right? So anyway, we'll watch how that develops here. But that is a monumental announcement that we're already in a recession. And it's a weird one because, the leftists have one point that you would expect more unemployment, but I do think that's coming. That's just a matter of time. This is one of the most rapid deteriorations in the economy that I've seen in 35 years of doing this. So I do think it's a pretty negative development. But let's not talk about that. Let's try to deal with the rally at hand and sort of enjoy the moment. So kind of my comments were X marks the spot. Do you remember this from a week ago? We covered this live as well. And we marked this spot because it was not only was it the top of the expected move for this week, it was where a lot of moving averages, joined up. You have your monthly 5, your weekly 21. You've got the 89 here on the daily. And this is also the top of the bear channel coming down. You can see that here. So this 40-70-ish area has really been our initial target. And I said I wanted to reevaluate when we got there. You can see the high volume node coming in up here. 4100 is also possible, but it does take us outside the expected move for the week. And that's where we have a fire line. Anyway, just a lot conjoining up here. This is our highest volume node, which takes us even out to this consolidation area here. So, 4070 was my initial target. Then I was looking at 4180, maybe up to 4200 if we can keep this rally going. And it appears we will. At the moment, they're buying this bad news, which, again, I think we saw that shift yesterday. Bad news is good news. However, as we got to this area yesterday in the rally, we do now have negative momentum divergences on a lot of the momentum charts. The NASDAQ 100 didn't go to a new high, and that may follow through, but there was a little bit of a divergence there. And again, I still ask the question, there's really no volume up in this range, so how come we're not moving through it faster? There shouldn't be a lot. This is kind of an air pocket. If we saw that on a lower time frame chart, that would not, price wouldn't last long in this area. So that's kind of interesting. Now, the other thing I wanted to point out is we're getting, I call it a kiss or a cross. You can see the 21, which I look at as the mean on the daily chart, crossing potentially up through the 50. And this is our algo trigger, which is already crossed up and through. And the 5 EMA is already crossed up and through. So these are all providing support. But I think, anytime you see the 21 cross up through the 50, that's a pretty significant move and usually provides a lot of momentum. And it sort of confirms what we've been expecting all along, and that is that we're coming off a 40-week cycle low here. And, that should give us a more powerful rally even in a bear market. And I'd point out to you, even on this run up here, we did see some moving averages cross and everything, kind of making you think the market was going to recover, and it rolled right over. So we've got to watch and see how we behave up here. This could be the biggest sucker rally of all time. But if we look at previous bear markets, typically we will recover about half of the decline from the peak here to the trough here on June 17th. And that's certainly what we saw back in the previous bear markets. Again, here's a look on a weekly chart. And I can actually put those recent bears up here and lay it. Now, this is drawn to scale. Let me get some of the minor ways off here. So there's the main wave pattern. This is your 2000 to 2003 bear market, which could be analogous here. And we actually went down a little bit further before we started recovering. But again, we recovered about up to this level and then rolled over again into the worst part of the bear. So, that's something we have to watch. And then maybe the 2008, 2007 to 2009 bear, I guess would be more formal. You can see, similar pattern, but it was right here that we actually recovered about half of what that market lost before we rolled over into a nasty decline. So, if you catch the Sunday broadcast, I go over a lot of the bigger picture stuff like this. But again, being that we're coming off a 40-week cycle low, considering the fact that, previous bear markets have a precedent for recovering a little bit more here. And then going back to the fact that this has got to be the most hated rally of all time. So think about it. And this, I was fortunate enough to make enough money to retire extremely young, but I did run my own hedge fund. I owned a bank and trust company when I was younger, and really got a bird's eye view into the money management world. And when you're sitting there managing other people's money and you're being compared to your peers, you're under a lot of pressure. And what's happening right now, and if this rally does follow through, it's not so much that anybody's all excited about everything and money managers think it's a great deal here. It's peer pressure. It's the pressure to perform, the pressure to retain clients, not be left behind. Money managers have a considerable amount of cash, probably the highest cash positions they've had in a long time. And they're sitting there on that cash. If the market takes off without them, they're going to be punished severely and they will lose clients. So that's the pressure they feel when a rally like this gets going. And of course, it sucks a lot of people in and then dumps them. So my thesis remains, and you can see this over on, if you look at the blog at blueprinttrading.com and go to the right and look at the sections over there, you'll see that there's one on our thesis, our operating thesis. My operating thesis continues to be that we're going to recover a little bit here, but I still think we're in a generational bear market. I think at this point we're only halfway to the goal, and that ultimately by early next year we will be down around 2,500, if not lower, as our final target. And that's mostly because 2,500 is the middle of the long-term channel. That is the middle of the 100-year price channel, which in all of this is sort of built around the concept of regression to the mean, and that would be the long-term mean. And that's about a 50% top to bottom correction, which is actually quite typical for a bear market, of this magnitude, what we call a generational bear market. So keep all of that in mind. And again, just tune in on Sunday night where you can take a look at that. I'll put it up here just briefly so you can see it. This is the 100-year price channel. This is the 2009 bull market channel. And all we've done right now is move to the middle of the bull market channel from 2009. I mean, that's nothing, absolutely nothing compared to what, typically happens in this type of a bear market. You can see the 2007 to 2009 bear over here. You can really see that, just like in that bear, we got a little rally for a few months and then rolled over again. So I always say you're here, but you're eventually headed to here, and it's just a matter of time and price. The 2009 bull market channel is 40%. The long-term bull market channel is 96%. Only 3 times in history have we hit the top of this channel, or recent history anyway, 1929, 2000, and now 2022. So that's a 3 sigma move up the channel, and that's what we're in the process of correcting, and I don't think that's going to be an overnight process. But for now, we're in rally mode, and what we're looking for is to see, will we get the follow-through from yesterday? So the issues is the momentum divergence that's developing up here going to lead to a short-term peak? Probably. I mean, that would be normal even if we are going to continue to rally. We need to see the NASDAQ 100, keeping pace with the S&P and not diverging on the rally. That's a problem right now. We need to monitor these crosses down here. Are these going to be significant? And then we got to set some targets too. If we look at the Fibonacci projecting, I call this a seed wave, your first wave in any kind of rally. And where this leg here is equal to this leg, we're already there. That was about 40.33 or so, 40.30, somewhere in there, which is also the low volume area. And that will often stop the market. But if you look at a 1.618, which would be, we're really recovering here, that like this is going to be a full 5-wave rally. That's all the way up at 42.32, which sort of is at these peaks here. That would be interesting. That would be the next potential target if this thing isn't going to just roll over here. If it does roll over here, this is nothing more than what's called an expanded flat in Elliott wave terms. And that's, basically a 5-3-5 pattern, 5 waves, A, B, C, and 5 waves. So, there is a school of thought out there that this is it, and the market will roll over somewhere from this X zone. So that's what we're keeping track of. And the way we keep track of that is we watch the auction. Now, because of this very precipitous slide over here, which is, people say there was never a capitulation. Folks, that is a capitulation. And it just doesn't scale up because of the bear market, but that is a capitulation. And you can see this air pocket in here. There's not a lot of volume up in here to stop us from moving up to this next high volume node. So that's kind of my expectation, although perhaps we're not going to go too much further for the week. But we're still not at 40.70, which is the top of this week's expected move. So from that perspective, we have plenty of room to go, right? So here's the weekly expected to move, and that's where the X marks the spot. So you've got the 89 up here, you've got the monthly 5, you've got the weekly 21, you've got the 89. All of these things are congregating here and may just, stun our growth for the week, and then we'll see what happens next week. When I'm trading, I don't care if I'm on swing trading or I am day trading, the first question I ask myself is, where are the stops? Okay, where are the stops? Because what I like to do is get positioned to go take them out. And, they'll do that a couple of times before you finally get through an area. And that's what, stops are set by amateurs. Institutional money managers don't use stops, okay? So that's where the amateurs are. And there's a guy, his name is Tom B. He's over at Bookmap. Does a lot. I highly recommend listening to him if you ever get the chance. But I love his little saying. It's think like an amateur, just don't act like one. So where are the stops today? If we look at the daily chart, clearly there's going to be stops sitting above yesterday's high. So if we're going to keep moving higher, that would be my first target. There's going to be stops sitting above the 89 here. There's going to be stops sitting above the weekly expected move. So if I can get positioned and ride to each of these stops in my day trading, I'll make plenty of money today. There's rarely a day that goes by that I don't make plenty of money. And you can actually watch that live in the trading room over at blueprinttrading.com today. So where are the stops? And, we can come down to the hourly chart and look, we're already headed up to that area. And I love to watch it play because I do pay for a lot of extremely detailed data. And here you go. You see this? They're running the stops right now. So the weekly high value node is up here. We've got that fib projection up here. We've got yesterday's high. And, here's the VPOC right now. Or actually, this is yesterday's settlement. So right now, they're running the stops above yesterday's settlement. So if I wasn't talking to you, what I could have done is gotten positioned down here right around last week's high, which is another important area. And I have this all marked over here. And I could have gotten positioned and ridden up here. I mean, we're getting some pretty steep price bars. So what that tells me is bad news is good news. But, we're sitting at 40.2750 on the E-mini right now. We can go all the way up to 40.65, 40.70 today. Of course, we're still pre-market, so we'll see how it goes. So anyway, that kind of gives you an idea. But where are those stops, right? And I mark all the areas every morning where I'm going to find those stops. And I'll get positioned, depends in if I think the market is generally long, I'll try to get positioned under the point of control if I can and come from that outside edge up. It just depends on what the market's doing. If the market's trending, I just get positioned as fast as I can. So we'll see what happens at the open. Right now, we haven't quite taken out yesterday's high yet. So here we sit again. I've got those ranges drawn, and this is an hourly chart. So again, we're in a recession. Now, another thing I want to mention to you is remember that as you're traveling along, always pay attention to your roundies and half roundies because the market will definitely, those are the levels the market's trying to achieve. So we're sitting here at 40.25 right now. So 40.50 is the next major area, and then 40.100 above that. And you kind of know what's there. I guess the other thing I'd mention, we left some points of control and some poor structure underneath us yesterday, which happens when you rally that fast. So we may, at some point, have to go down and repair a lot of that structure. So keep that in mind. I think the other thing I want to mention to you, too, is we have now broken out of the 6-month opening range. Now, what that is back when I was managing a hedge fund, in institutional money management, money managers will often look at the first 10 days of January and use that as their opening 6-month range for the first part of the year. And then they look at the first 10 days of July and establish that as their opening range for the second half of the year. And generally speaking, if you move above that range, it's kind of like, it's considered to be pretty positive. And, that opening range high can provide support. So notably, here's the 6-month opening range here. And here's the low here at 37.44. Here's the high at 38.22. Notice that's also a high volume node now. So this, we broke out of that range, and notice how we set right back on it, and now we're moving higher. So that's a little bit of a positive for the second half of the year. I mean, nothing is written in stone, but I think at least initially here we can look at that as positive. And don't try to figure out why the market's rallying. Just, you got to go with the flow, especially these days when the market is really a tool of Fed policy. It's not connected to anything. The other thing I think is a little bit handy here is to look at your June candle as a breakout range. I mean, every candle is a breakout range, obviously. But look at your June candle and look at those levels, because I think if we break above the June high, which of course is where this, last consolidation is, that would definitely be a big positive for the rest of the year. And on the other hand, obviously, if we break the June low at 36.39, that's a negative. We're already past the June midpoint and the June pivot. So right now, purely from a price action perspective, there are quite a few positives, as I would expect coming off a 40-week cycle. Now, the 40-week cycle doesn't last 40 weeks. That's the name of the cycle. That was named by J.M. Hurst back in the 70s. So we call it the nominal 40-week. It tends to vary, but it runs roughly 30 to 35 weeks, and the 20-week cycles roughly 15 to 16 weeks. So in most of our swing trading, and the 40-week cycle is probably the most important cycle we encounter in any given year. So it's a very important low when it establishes. We're still in a bear market until proven otherwise, but that's an important low, and I would expect that to give us a lot more than some of these other lows we've experienced recently. And that's happening, although it got off to kind of a slow start. So, but if we are turning around here, remember, this is a 1, 2, and this is now going to be a 3 wave, right? And we've got a 1, 2, and this would be a 3 of a 3. So if we're blasting out of here, this is where we do it. And, but for today, all I'm looking for is the usual. I want to, I know that there's going to be stops up here, up here, up here, and I want to chase those, because as you can see here, we hit those stops and now we've paused again, right? So pretty positive. We're way, 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 way above the VWAP and the VPOC right now, which are all the way down here. Sorry to scrunch it up so much. Actually, let me do it this way. Let's just see if I can grab and move this up. Should be able to. Yeah, there we go. So where's the VPOC? Wow, we're really above it. So anyway, we'll see. But that's what I do. I just get positioned and I go after those stops. Is that it? No. Probably will move up on us. Anyway, and when we get to these levels, I'm just watching the auction. I'm watching the micro auction. I'm just watching the auction. That's, like right now we've got a high volume node at 40.26, okay? And basically what I want to see now is, are we going to push away from it to the downside, or are we going to get over that to the upside? And I can look down here. There's only 58 contracts that traded at 40.14, right? And I can see about 245 contracts trading up here at 40.29. There's definitely a lot of volume up here, which is showing some degree of price acceptance. There's the micro VWAP, which is sitting right here. And this is yesterday's settlement, okay? So we're kind of flipping around yesterday's close. I mean, the settlement. I get the settlement from the CME because often it's different from what you see in trading platforms, but that's the true declared yesterday's close settlement, et cetera. So anyway, and then down here, you're looking at the open for the E-mini last night. So again, kind of a key area. And not only do they put stops up here, right, but there will be stops down here. So if you just get positioned to go after the amateurs, you're pretty darn well assured to make money. So let me leave it there for this morning. Obviously, welcome to the recession of 2022. I've never seen anything like the last 18 months. You know, doesn't matter if you have a D or an R behind your name, this administration, the people in charge, not only here but in Europe, the World Economic Forum group, the Davos people, are running us into the ground. And you just have to recognize that. I've never seen the U.S. go so far south in such a short period of time. And, you know, I want to believe it's incompetence, and there certainly is an element of incompetence, but you do have to get to the point that you wonder if it's all purposeful. I've just never seen anything like this, and it's very, very disheartening, I know, to a lot of people, but folks, don't give up. This is the most incredible country on the face of the planet. It's an extraordinary country, and our fellow citizens are extraordinary people, and this country has gotten through a lot worse than what we're going through now, and we'll get through this because the people of this country are great. And let me sign off by saying one more thing. Don't let these people turn you against your fellow citizens. Just don't let them do it. You know, when it comes down to it, we all agree on a lot more than we disagree on, you know, and this effort to pit us against each other is it's just terrible, you know. It's just terrible because we have so much more in common than we have in terms of our differences. And we've always aired our differences, always aired them in a friendly way. I mean, sure, there's always extremes on both sides, but in general, we've always been friendly to each other about our disagreements. And our disagreements, the debate about our disagreements is a very healthy thing. And when you see people using everything from language to authoritarianism to try to maintain their power, it tells you everything you need to know. They know that in a free country, in a free world, and in capitalism, you know, they're afraid that they may lose their power, they may lose their money. I mean, look at Facebook right now, right? On top of the world a year ago, and now they're, you know, in trouble. I mean, in deep trouble, right? So when you see people trying to control things, it's because they're afraid that a free market is going to destroy them or destroy their wealth or take their wealth. And so what they want to do is close ranks, close everything up, and make it so that they can stay in power and nobody else can come into power. It's such a basic human thing. That's why it doesn't seem like human nature changes over the years. So that's what's going on. We have a group of people that you know, are probably not where they are meritoriously, and so they don't want to lose their position, and so they're going to do everything in their power to maintain it for them and their families. You know, God help what happens to the rest of us, right? So see that for what it is. Look at your fellow citizens and realize that while we have our differences, they're not significant, you know. And don't allow these people to turn us against each other. We need to unite. Doesn't matter if you're a liberal, a conservative, a Democrat, or a Republican. Capitalism is still the best system out there. It's lifted more people from poverty than any other system in history, even though it can be brutal at times. And of course, we need safety nets and things, and we'll have those. So, in freedom, without freedom of speech, without freedom to pursue what we need to pursue, there would be, this country would not be what it is. I mean, think about it. This small population, small country of 300 million people, which is a rounding error in China and India, have been able to control the world because of our system. So let's not destroy that. Don't let any of these people, I don't care if they're coming from the right or the left, don't let them divide us. This is the greatest country in the world, and we need to get through this unbelievable Orwellian time. Anyway, sometimes I get going and I don't stop, so I'm going to stop it there. Have a great day. Have a great rest of your week. I'll be back tomorrow morning with a look at everything. And just another quick review of the market. We're kind of back where we started before the announcements. So we'll see. This is going to be an interesting recession because, we've got all these demographic trends that have caught up with us, and there aren't as many people available for the workforce, whether you're in China or most of the world, other than maybe America. So we've got this, low unemployment, but yet we've got growth contracting. So we'll see what all that brings. Anyway, have a great day. Signing off, A.F. Thornton, Blueprint Quantitative Strategies. Give us a like, give us a thumbs up. We're new on YouTube, so we'd appreciate your support. Consider joining the channel and joining our family. And also consider signing up for the notifications so you know when these will come out. Again, have a great morning. Have a great rest of your day. And I'll be back tomorrow morning. Bye-bye.